This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, July 14th, 2016. Euro dollar. So the euro has mostly been consolidating in recent trade, though overall the pressure still remains on the downside while the market holds below a recent high at 111.87. With this high in place, there is still risk for additional setbacks back towards a retest of the June 24th low at 109.12, below which exposes 108.23. We would need to see a break back above 111.87 to take the immediate pressure off the downside. Sterling dollar. So cable has recently collapsed to plus 30-year lows in the previous week, and since then we've seen a bit of a correction. But overall, while the market holds below the previous weekly low around 133.40, the price action is defined as inside week price action, with the market confined to the previous weekly range. At this point, we're going to need to see a break back above 133.40 or below the recent lows that we saw down around 127.98 for clear directional insight. Dollar yen. So dollar yen has seen a nice recovery in recent trade, but the market holds below 106.81, that previous lower top. While it holds below 106.81, there is risk for another topside failure and bearish resumption back down towards a retest of those recent multi-month and 2016 lows at 98.99. Euro Swiss. So Euro Swiss has seen a nice recovery in recent trade, with the market continuing to be very well supported on dips. At this point, there is risk for additional upside in the sessions ahead back towards the recent range highs in the 111.30 to 112 area. Any setback should be supported into 108, with only a close back below 108 to really delay the immediate constructive outlook for Euro Swiss. Aussie dollar. So Aussie's rallied up over the past several sessions, though the market continues to show good resistance up towards the 76.50 area. If the market can establish a daily close above 76.50, it would do a good job of then opening the door for an upside extension towards a retest of the 2016 high at 78.35. But inability to establish a daily close above 76.50 will suggest that the market is looking to put in a lower top ahead of the next major downside extension. Dollar CAD. So dollar CAD continues to show signs of a meaningful base, though the market hasn't been able to yet to confirm the base, which would be confirmed on a break above key resistance at 131.89. At this point, look for setbacks though to be well supported ahead of some critical support at 126.55, with only a break back below 26.55 to compromise the basing outlook for dollar CAD. Kiwi dollar. So Kiwi has rallied up recently to fresh 2016 highs, though this market appears to be having a good job of resistance up above 73. If the market can fail to establish again above 73, it could open the door for setbacks in the coming sessions. Look for a break and close back below recent support, which comes in around 72.12, to strengthen this outlook and accelerate declines. But inability to establish back below 72.12 would keep the pressure on the top side, potentially exposing fresh 2016 highs. SPX 500. So the S&P 500 has once again in Wednesday trade rallied up to fresh record highs, just shy of 2160 thus far. At this point, the market is looking a little bit stretched, and overall on a longer term basis, there are signs of the potential for a longer term top. But at a minimum, we would need to see a break back below 2073 to strengthen this outlook and accelerate declines. Until then, there is risk for additional upside, with the market potentially focused on a test of psychological barriers and fresh record highs at 2200. Initially, though, support comes in by the low that we saw on in the previous session on Tuesday at 2136. Gold. So gold has seen a little bit of a reversal in recent trade, though ultimately this market remains very well supported on dips towards 1300. At this point, look for this market to consolidate ahead of the next upside extension towards a measured move objective, which comes in at 1400. Ultimately, only back below 1250 would really compromise the highly constructive outlook for gold.